There are three huge problems in the Raleigh real estate market, and I'm going to talk about all three of them in today's video. But first, a caveat. If you're planning to buy a home in Raleigh, your experience and whether you will deal with these issues will totally depend on the price point and location of your purchase. This fall, I've worked with buyers at almost every price point. I've seen how COVID has impacted our market at all levels. Not everyone is going to experience the three problems we're going to talk about in just a minute, but for some, it can be incredibly challenging to overcome. And sellers, even though it's a seller's market now, you are not completely off the hook. These issues can also affect you. After I lay out our problems, I'm going to give everyone, buyers and sellers, some strategies to help overcome them. We are experiencing some significant ripple effects from the COVID pandemic that are causing some serious pain points in the market right now, even at price points above our median sale price, which varies from location to location. The first one is the lumber shortage. First, it's important to understand how this comes into play in the bigger historical picture of the Raleigh housing market and how it affects both new and existing home sales. After the last economic downturn in 2008, many builders shut down and new construction almost came to a standstill because there just weren't enough buyers for those new homes. It took quite a few years for the housing market to ramp back up, and around 2015 or 16, we started to really feel the pressure of a housing shortage as growing demand outstripped supply. So when the market started to flip and turned from a buyer's market into a seller's market, builders had to seriously turn up their production on new builds in order to fill that inventory gap. It took them some time to get a reasonable amount of production, but they eventually did, and new construction inventory helped meet the demand for housing in Raleigh and kept our prices from skyrocketing due to lack of inventory. Although prices were rising, they weren't rising too quickly. Enter COVID. In March or April of this year, when COVID hit, lumber producers in both the US and Canada put the brakes on operations because they were forecasting a lack of demand. But they didn't anticipate two things: a huge demand for housing as newly work-from-home employees found themselves stuck in small homes or apartments in larger cities and looked to suburbs and smaller cities like Raleigh for the better quality of life. The other thing they didn't anticipate was the huge demand for lumber by homeowners. Trapped at home by COVID restrictions, tackling every DIY project they had ever imagined, lumber became the new toilet paper. And the fallout of all of this is that lumber prices have risen by 50% throughout the US. This is having a huge impact on inventory and home prices everywhere, including Raleigh, but like I said, it isn't affecting everyone in the market, and I'll get into that in a little bit. A couple things that this lumber shortage is causing. One, prices for new build homes have risen sharply in the last few months. My first concern with this is, are people really going to pay those increased prices? So far, the answer is yes, and builders that can actually get inventory built are selling it just as quickly as before the price increases. I have the feeling that the difficulty some builders are having with getting inventory on the ground is contributing to buyers being willing to pay the higher prices. Remember, a lack of supply is going to cause an increase in price. People that have money and want to buy a new home will absolutely spend it. Many who are moving to this area are coming from even higher priced areas and have the cash necessary to make their purchases, even at the elevated prices, which to them might not seem that unreasonably high. You want my opinion? Personally, I would caution that at least in the new construction market, this is pretty likely to be a bubble. And when lumber prices come back down, supply is more readily available and builders are able to start churning out homes again. I believe the supply relative to the demand will no longer support the increase in price. So if you're buying new construction during COVID, be prepared to stay in that home a while to allow for the steady rise in property value in this area to catch up to the price you paid for your home during the lumber bubble. One more caveat. I don't have a crystal ball. If I ever acquire one, I will definitely share what it tells me and we can all get rich together. In the meantime, this is just my opinion and I could be wrong. Because existing home sales do compete with new home sales, the lack of new home inventory and increased prices might have made existing homes even more attractive to buyers. This too has elevated the scarcity and the cost of these existing homes, even though the lumber was bought a long time ago. So, list prices for all homes are up about 9%, and total homes sold is down by 50% due to lack of inventory. Prices are going up, and people are fighting over the homes available to purchase them. 25% of properties are selling over list price compared to 18% in 2019, and some of those battles can get extremely competitive. I've seen properties sell over list price by as much as $45,000. Keep in mind that the ratio of homes selling over list is not evenly distributed across all homes in all areas. You're more likely to see those bidding wars in homes in certain price points and certain locations. Generalizations are not what you should rely upon when actually attempting to purchase or sell a home. You need to look at the specifics of the home. For example, when I run comps before I advise a buyer on an offer price, I always look at what percentage of homes are selling over list in that given market to see how hot it really is. I've seen some price points with more than 50% of homes selling over list price, so that tells you that that average of 25% over list means that some price points are seeing bidding wars happen much less frequently. So I can't give a sweeping statement about the whole area. Well, I could, but it wouldn't be very accurate or helpful. Here's my tip. When you're making an offer, you want to get good guidance from your agent about the specific home you're offering on. You don't want to make an offer over list price on a home that isn't likely to have much competition. The second issue I'm seeing is that land is becoming increasingly difficult to find in Wake County. The further away from the city center you go, the more vacant land there is, but the fact that there's such a high demand for housing means that builders have been fighting over buildable land for some time. This in turn means that land prices are increasing. And of course, when land prices increase, not only does the home price increase, lot sizes decrease. And what do so many people want right now when we're still trying to keep our distance from too many people? A nice big backyard. Raleigh used to be known as the place you could get a nice home at an affordable price with a beautiful backyard. That's really changing. Here's my opinion. If you're one of those who wants a home with a big backyard, you're going to have to be open to a few things. First, you can look in more rural environments. You're not going to have quick access to things like greenways and great shopping because those things are generally built where there are more people, but it's easier to find a big backyard out in the country. Two, you can be open to an older home. Back in the 60s and 70s, many homes were built on much larger lots. You may find homes that have already been updated if your price point is high enough, or you may find a diamond in the rough that needs some work, but has a great lot in a great location. And third, if you want a newer home close into amenities with half an acre or more, the average price for a home like that is almost $800,000. It is possible to find them cheaper within the city limits of some of the suburbs, but there isn't a lot to choose from. And finally, the last issue I'm seeing is affecting everyone who is buying new construction or existing homes or selling their home, and that is stricter lending requirements. All lenders have instituted stricter lending requirements that are making the closing process even more challenging than normal. Let me explain. When you get a loan from a bank or a mortgage broker, a person called an underwriter has to check and make sure that everything you told them on the application is actually accurate and correct. Because of COVID, lenders are more sensitive to changes in people's situation during the underwriting of the loan. They don't want to lend on a home to someone who lost their job a week before closing. So there are some new rules that have gone into place to try to catch changes to people's financial profiles that happen during the lending application period, particularly as the transaction gets closer to closing. One rule is that documents have a shorter life. Before COVID, when you submitted your bank statements or other documents, they were good for 4 months. Now, lenders have to get new documents if they are more than 60 days old. Why is that a big deal? Most closings don't take more than 60 days, right? But bank statements are only issued once per month, and that time frame doesn't usually coincide with the closing date on your purchase contract. So you're probably going to have to scramble to get updated documents toward the end of closing. It's almost like going through the loan process twice. Also, because lenders are so swamped with all these new rules, the low interest rates, all the refinances and purchases happening right now, they are just processing more loans than they ever have before, and this is slowing down the process, and lender delays seem to be happening more frequently. Here are my tips for what you can do to navigate those challenging times when purchasing a home with a lender in a COVID market. Stay flexible. Even in the best of times, there's a ton of moving parts in a real estate transaction. We have a 14-day grace period built into the North Carolina purchase contract for a reason. It's always best to have a backup plan just in case the worst happens and you get delayed. It's even more important to have that plan in our current market. Number two, and I cannot stress this enough, please, please, please use a local lender who is recommended by someone you trust. The reason I say this is because when you use a big national bank, they often have so many different people working on each closing that things can get lost in translation. You may have one person who seems like a fantastic communicator when you first fill out the application, only for them to disappear once you're under contract. It can be extremely and unnecessarily frustrating or even damaging to your bottom line when things get sticky and your inspection period is about to end and you still haven't seen the appraisal and you don't have a person on the mortgage end that you can call to get your paperwork expedited. My preferred lender always picks up her phone when I call. Every single time. And when you're in the middle of a transaction, that is some important stuff. And lastly, stay in touch with your lender and have all of your paperwork submitted as soon as it's asked for. Any little delay on your part can affect closing, and you might find that your closing date's been pushed back because your turnaround time on their request was too long. I know the closing period is an intense period of time and it goes by very quickly, and there's a lot to do during that time to get your loan funded by the closing date. So stay on top of that checklist that your lender gives you and you'll do great. If you like this video, you might also like this video about the cost of living in Raleigh, and you know you want to subscribe so you don't miss the next video. Go on, do it. Thanks for watching. Have a great day.